Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your daily midday market minute. 4,300 remains elusive, but before I get to it, if you're watching this on YouTube, please click the link below and subscribe. Like and subscribe. If you're watching from our website, there's also a link below to direct you to YouTube, and you can subscribe that way. We'd love for you to follow us. We'd love for you to help us build our following. All right, let's get to it. Yeah, 4,300, the close above there at least remains elusive. We did trade 43.05.75, but remember, we have two big levels of strong resistance, where major 4-star resistance and then major 3-star resistance, in which this market must close above, the S&P in particular, must close above in order to secure this breakout. So check it out. It's on the Morning Express, but the first level was hit here today. That's rare major 4-star resistance. The NASDAQ actually was able to outperform on the day. It's the only one that finished positive. The Dow down 200. So we talked about on Friday, is this going to be a rotation in cyclicals? We had healthcare and industrials outperform tech. In fact, tech was the worst performing sector through last week as it just digested gains. It didn't lose, but I think it was up just under 2%. The real takeaway, or just under 1%, or the real takeaway though, is we had data today, ISM non-manufacturing, and if it came in hot, the market probably would have rolled over. But it didn't come in hot, and it was. You saw an expansion of the ISM headline. You saw an expansion of prices, though the slowest expansion of prices since April of 2020. And the slowest expansion of a headline ISM non-manufacturing is going back to December, when December did contract. But this was another expansion. Orders expanded as well. And you know what? Coming with the OPEC Plus meeting yesterday, that they cut production because they're really worried about global growth. It was almost like a recession trade did take hold here through the day. You had the Russell roll over. Russell 2000 rolled over pretty sharply. It was down as much as more than 30 points, nearly 2%. It finished the day down about 1.5%. The Dow again was down 1%. It finished the day down about 0.75%. But you had this recession trade take hold, and crude oil coughed up its gains. So the market really doesn't know what it wants to do. The S&P is trying to break out. It is a bull market. Don't deny that. But you got to stay nimble here. And I think it's important to not just become bearish just for just an arbitrary reason that, okay, we rally a lot. What's the leadership going to be? No, this market does have a path to least resistance higher. We have less uncertainty after the non-farm payroll report. We don't have a lot to get through this week, but we have CPI next week. We have the Fed. And if we get through there and there's less uncertainty and CPI is cooling, maybe even below 4%, there's no reason why this market can't be breaking out above 4,300. So we may have to wait till then, and that may include a little bit of a pullback to digest some gains, but staying nimble and remaining open-minded to that this thing can still break out and 4,500 can be achieved is important as this evolves. But for now, 4,300 is very elusive, and that takes us into tomorrow. And crude oil is finishing on the lows of the session. We're below $72 right now. Giving up all those gains, we traded as high as 75.06 on the open. Never went back above there from the Sunday night open. And it's really this buy the rumors, sell the news. And we've rolled some calls out. I'm playing that long in the fund, the CTA. Our commodity trading program. I rolled some calls up and out to lock in some gains from some longs we've had. And I'm taking those off here in a day, taking at least 2/3 of it off, probably the other third of it by tomorrow morning, just kind of seeing where things are. But this is a heck of a reversal here on the day. Definitely brings caution. We have short-term energy outlook tomorrow. We have EIA, inventories through the week will start coming into the picture with API and some of the estimates as the day unfolds. So I think staying nimble, it's not a bad thing seeing this above $70 given where we were last week. So I would stay optimistic for now, but be cautious given this reversal. And the more that we stay, if we get below 71, we're starting to chew through some good, there's going to be leaving some damage in this chart, because that was where this market really rallied and started jumping through. So I'm just be cautious the lower this goes. And then lastly, the metals had a great session. I mean, gold was able to capitalize off of the miss on ISM non-manufacturing. You had silver kind of almost get positive, got positive for a moment, and there's a lot of resistance in silver at 23.80. Now there was a lot of indiscriminate selling in gold and silver on Friday, even though we did not see those expectations for a Fed hike jump up, but we're starting to see some of those cuts being priced out, and that's weighing on things. The dollar has had some strength, but the real headwind remains the Chinese yuan. But you also have the Chinese yuan making a little bit of a potential, sort of spinning top. I don't want to get too excited, but you got copper trading higher. You have platinum moved up The White House did talk about some green hydrogen movement. And I think platinum helped underpin platinum. You've heard that from Europe, that helped underpin platinum. Say that 10 times fast. Underpin platinum. Last summer, good move with platinum, but a lot of resistance at 1040. Copper trading higher could be a sign that we might be out of the worst of China, but we need some strength in the Chinese yuan. See if we can't get that as the week unfolds. Trade balance data out of China tomorrow night. Inflation data of China, I think, Thursday night. For now, though, this is a good reversal back up in gold. Still a lot of damage from Friday. We'll have to see how things play out from here, but it's going to be all about the dollar, all about the currencies. And the euro was still flat on the day. We did see the 10-year, the 5-year, and the 2-year all trade positive on the day, though the 30-year struggled to turn positive on the year, meaning those rates are coming down. That's supportive for metal. So going into tomorrow, staying nimble. Our trade desk is here, and there's a lot going on, so give us a call. We'd love to hear from you. 312-278-0500. Remember, futures trading involves substantial risk of loss. It's not suitable for all investors.